Hi, everyone. I'm Matt Clark, research analyst for Money Markets here with your weekly marijuana market update. I do hope everyone had a great holiday, a great Christmas, New Year's, and you're all ready to start off 2022 with a bang. Make sure you do subscribe to our YouTube channel if you haven't already to get notified each and every time we do post a new video. We've got a lot of great weekly features out there, including Ask Adam Anything. This is where I get to sit down with our chief investment strategist, Adam O'Dell, and ask him any question that either you or I have for him and get his unique market insights. We have Investing with Charles. Green Zone Fortunes co-editor Charles Sizemore and I talk about all things related to stocks and the economy, including comparing stocks to give you the best investment advice. And we have our Bull and the Bear podcast, which is our weekly podcast where I show you trends and analysis that move the market. All these series are available right here on our YouTube channel. Plus, we're looking to add some new things, so make sure you check back often and find out what else we have in store. I also want to make sure you're checking out our premium investment service, Green Zone Fortunes. Adam, Charles, and I work very hard to give you our best stock pick of the month every single month, and it's delivered right to your inbox. We'll try to put a link up somewhere here so you can get more information on Green Zone Fortunes. Now, today for today's marijuana market update, I'm going to talk about a cannabis stock that I think has a lot of potential in 2022, and I'm going to answer a reader question about another stock I think has some potential that I covered last month. Now, over the holidays, I'm kind of a nerd, so I spent a lot of time catching up on reading research reports covering all sectors of the market, just because, like I said, I'm a nerd. That's what I do. But of course, any reports on cannabis really piqued my interest. And I read one that really focused on the third quarter cash flow of several cannabis operators. And there was one company that really stood out. Now, while many cannabis companies did see some slight decreases in their cash flow quarter over quarter, 54% of the 28 companies covered in the report, all of them are basically large MSOs, or multi-state operators rather, saw positive operating cash flow in the third quarter. Now, positive cash flow is important for cannabis businesses because it shows the company can generate enough cash to maintain and grow its operation. Now, if operating cash flow is negative, the company has to turn to a bank to finance any capital expansion or any operations. And we know how difficult that can be in the cannabis space. So if you have positive operating cash flow, that's really good news, especially if you are a cannabis operator. Now, one company reported a 221% year-over-year growth in revenue in the third quarter, but more importantly, its operating cash flow margin was an astounding 58%. That's 4,161 basis points higher than the previous quarter. That is massive. That is huge growth. The company also led the way in cash from operations. Now, this is basically the amount of money brought in from ongoing regular business operations. It's basically the money you bring in from sales and everything that you do. Now, the margin for its cash from operations was 32%, and that was a quarterly increase of 1,723 basis points. Also, a nice jump. All told, though, the company led all 28 other companies in operating cash flow, cash from operations, and adjusted earnings before interest, taxes, depreciation, amortization, or EBITDA. What's more is the company was in the top 3 in both adjusted EBITDA and cash from operations in the previous quarter. That indicates to me that it's got very sustainable performance financially. And for cannabis companies, that's hard to find. The company that I found here was Verano Holdings Corporation. It trades over the counter. Its ticker symbol is VRNOF. It's a Chicago-based company. It's a multi-state cannabis operator in the U.S. with consumer brands like Encore, Move, which has the clever little U with the 2 dots above it, and Verano, which is its staple. Now, it holds licenses to operate in Illinois, Florida, Arizona, New Jersey, Pennsylvania, Ohio, Maryland, Massachusetts, Nevada, Michigan, Arkansas, California, Missouri, and West Virginia. And its operations have paid off in terms of its total revenue. In 2018, the company managed only about $31.1 million in total annual revenue. That more than doubled to $66 million the next year. The COVID-19 pandemic was very generous to Verano in 2020 and 2021. I say that in jest, as its revenue jumped to $228.5 million and then to $763.9 million, respectively. And forecasts suggest that the growth isn't over for Verano yet. And by 2023, the company is estimated to bring in more than $1.5 billion in total annual revenue. That's a 101.7% increase from its record-setting numbers from 2021. The company's EBITDA is also expected to grow at a pretty strong clip. Verano's earnings before taxes, interest, taxes, depreciation, and amortization was only about $10.9 million in 2018. And that actually fell to $8.8 million the following year. But in 2020 and 2021, the company saw impressive growth as its EBITDA jumped to $218.7 million in 2020 and $362.9 million in 2021. Estimates have the company's adjusted EBITDA going to $684.6 million by 2023. That's an 88.6% jump over 2021. It's a lot of numbers, but all told, I know it's a lot of numbers to digest, but basically the bottom line here is that the company is growing its revenue, it's growing its earnings, and it's doing it at a very impressive pace. The margin percentage for both total revenue and EBITDA is expected to be lower than 2020, which was a banner year for the company, but still in a very healthy range, meaning they're going to spend a little bit more. They're going to make more, obviously, but they're going to spend a little bit more. And they're going to bring that earnings down just a little, but only by just a few percentage points over 2020 and 2021. And all this suggests that Verano's management is doing a very good job of managing the company's money. And on a side note of that, the company recently appointed Brett Summerer as its chief financial officer. Now, Summerer, many of you may not know this, you may know this, but he spent 10 years in financial planning, analysis. He was also the controller and CFO for General Motors. He was also head of finance and analysis for Corning, and he was a CFO for Kraft Heinz U.S. operation. So he's got a very strong pedigree. He actually started in IT, which may also kind of benefit Verano as well, getting into that internet space. But his primary goal is finance, and he's done a good job at all the stops he's had at not only managing finances, but growing the bottom line. And that's something that Verano is already doing and could even improve upon with Summerer at the helm in the finance office. Now, plus the company did just close on the acquisition of Caring Nature LLC and Connecticut Pharmaceutical Solutions Incorporated, both of these companies based in Connecticut, obviously, and it gives the company a solid foothold in Connecticut, which only made adult use cannabis legal in July of 2021, and this already gives them a nice footprint into Connecticut. Not a huge market by any stretch of the imagination. Connecticut doesn't have a very large population, but it does have the potential to trend along with the rest of the Northeast in the United States for strong sales moving forward. Now, the financial stability is starting to move Verano stock up. The share price fell about 60% from its 52-week high set in February of 2021, but since late December, we've seen a nice upward trend. Additionally, its 50-day moving average is set to cross above its 100-day moving average, which sets up a nice golden cross pattern that indicates additional strength in that momentum. It's not a tell-all. It's not an absolute. But when you have a golden cross situation, it does tell investors that there is a lot of potential upside in the stock price, and that could push it even higher. Plus, its volume, if you notice in the stock chart here, was high in November when it spiked up to around $14 and met some resistance there, pared back. But that volume has been consistently high and around 500,000 shares traded daily, which is nice. That's a nice volume to have for a cannabis stock. Now, I like where this company is heading. It's showing good upward momentum, even though the rest of the cannabis market is either flat or pushing down slightly. And the other analysts that are covering Verano, 8 if you count me, have rated Verano a buy or even outperform. So all these analysts are suggesting that Verano is a strong buy for you, or it is expected to outperform the market, and I agree. It's got strong financials, and its expansion doesn't seem to be pie in the sky. It's not just shooting for the moon and buying big companies for hopes of just adding big to make big. What they're doing is they're scaling it to market conditions. They went out and bought 2 mid-sized Connecticut-only operators to give themselves a footprint, not a multi-state operator that gives them a footprint in other states that they're already in. They're doing this scaled, and I think that's really smart, especially in these market conditions. I think the upward trend in the stock price does present a nice buying opportunity. As you know, our philosophy here is to buy high and to sell higher. The stock found some support at $10 and could see resistance at $14, but I think it has the potential to go even higher than that. So Verano, I think over the counter, or if you even wanted to buy its CSX stock on the Canadian Stock Exchange, you could do that as well. I think both have potential to be very strong in 2022. Now, on to a reader question, which is kind of related to 2022. Frank emailed me at our email address, which is feedback@moneyandmarkets.com. Flash that down below there. And he said, I have an investment in Columbia Care. Where do you see that stock going in the next 12 months? Thanks, Frank. Well, thank you for your question, Frank, and for submitting and using your question. My team and I are going to reach out to you and set you up with some very cool money markets gear, like maybe a t-shirt or a sweatshirt, which I have hanging on my back of my chair here. But we're going to hook you up with that. So look for an email trying to get your contact information so we can set you up with that. Now, I want to preface everything by saying I don't give personal financial advice. I can't do that. I'm not allowed to do that. So in terms of your personal holdings, I really can't tell you about that. What I can do is I can kind of reflect back on what I talked about involving Columbia Care back in December. And back on December 2nd, I talked about the volatility of the cannabis market, which we've all seen since February of last year. However, in the third quarter of 2021, 10 of 11 multi-state operators in cannabis saw a positive change in revenue quarter over quarter. We talked about that just a few minutes ago. Marijuana Business Daily reported that 10 of 11 reported that. The company that made the biggest positive change was Columbia Care. It trades over the counter, and its ticker symbol is CCHWF. It reported about $132.3 million in quarterly revenue, which was a 21% bump up from the previous quarter and up a massive 144% from the prior year. However, the company reported a loss of $37.2 million for the quarter, which is exactly what potential investors were looking at, because it's actually pushed the share price lower. And it's why, in my opinion, that it has dropped 60% off its 52-week high that it set back in February. Now, as I said in the video, I like Columbia Care. It has 99 dispensaries and 31 cultivation and manufacturing facilities, reporting a 21% quarter over quarter and 144% rather year over year increase in revenue, which suggests this stock should be hot with investors. But of course, as you can tell, it's not, because its stock price is down 60% off that high. But institutional investors are looking at that $37 million quarterly loss by the company, and not the fact that that Columbia Care has a footprint in one of the largest markets in the European Union set to legalize cannabis, and that's Germany. Columbia Care is already in both Germany and the UK, including a joint venture with German-based Moeller Pharma GmbH to sell cannabinoid-infused products. And with some stronger upside momentum here, I think Columbia Care would present a nice buying opportunity for investors looking to capitalize on the cannabis expansion in Europe. However, it's not there yet. Realistically, the price of Columbia Care is probably going to remain around $3 per share until something significant breaks here in the U.S. I don't know that the expansion in Germany is going to resonate, or how it's going to resonate with investors here in the U.S. With an over-the-counter stock. Right now, it's down around $293 a share, $294 as I record this. I think it's going to hover in that range for a bit. I don't see it popping back up until we see some massive headline that suggests all cannabis companies are going to go move together in an upward form. It's not quite like Verano, which has very strong financial performance to really back up anything that it does. Columbia Care doesn't have that yet. Again, I still like the company. I think it's got a lot of potential in 2022. I just think it's going to take that one spark that moves it in that direction. So, Frank, I hope that answers your question, and thank you for sending it. By the way, like I said, we're going to hook you up with some cool money and markets gear as our way of saying thank you for submitting your question and for letting us use that here on our video. If you do have a question about about a cannabis stock or maybe the market in general, email me. That email address is feedback@moneyandmarkets.com. We'll flash that down below. Or you can also comment here on our YouTube channel. If you send us a question, or maybe a video of you asking a question, or a testimonial, maybe you've followed our cannabis watch list, or you followed some recommendations and you're doing well, and we use it, we are going to send you some free money and markets gear like t-shirts, hats, sweatshirts, all kinds of stuff. Still pushing the boss to get even more stuff. More stuff is on the way. So we are going to send that out to you. But submit a question either here on YouTube or email it to us at feedback@moneyandmarkets.com. Don't forget about all the great content we have here on our YouTube channel. It is the best investment insight for you, and it is yours all for free. Also, follow me on Twitter. I give you more insights, not just in the cannabis market, but the broader market in general, and even some other fluffy stuff. I like to follow soccer, football. So if you're into that, I like to follow that as well. You can find me. My Twitter handle is @InvestWithMattC. That's Invest with Matt C, all one word. And follow me, and I will try to follow you back. Thank you to all of you who watch our videos. We had a great 2021. The channel really exploded. We're looking for even more growth here in 2022. We do this, Adam, Charles, and I, and our team, we do this because we want to bring you the best insights into not just cannabis, but to investing. We want to help you grow your portfolio and help you make money. It's not about us making money. It's about you making money. When you make money, then we feel really good about ourselves. So in a roundabout way. So also check out the mothership. That is moneyandmarkets.com. Check it out each and every day for content that provides you safe, sound, smart, simple, profitable investment information for your portfolio. I'm Matt Clark, research analyst for Money Markets and your host of the Marijuana Market Update. Until next time, everyone, safe trading.